Welcome to this latest episode of the C-Suite podcast that we're producing in partnership with Payabl and their Pay It Forward podcast. Throughout this series, we've been exploring the evolving world of payments innovation, looking at how technology, regulation, and consumer demand are shaping the way money moves across the globe. On this episode, we're going to discuss cross-border payments and how stablecoins are becoming a key part of the conversation. We'll look into the opportunities for merchants, the regulatory changes driving adoption, and how this technology might sit alongside existing cross-border solutions. So let's get going. I'm your host, Russell Goldsmith, and joining me for the discussion are Lucy Ingham, VP of Content and Editor-in-Chief at FXC Intelligence, Aleksandr Povarov, a FinTech payments product lead who has held senior positions at both Wise and most recently at Wolt. And then from our partners for this series, we have Kristaps Zips, UK CEO of Payabl. So welcome to you all. Lucy, let's come to you first. You recently authored the FXC Intelligence report about the state of stablecoins in cross-border payments. So I thought that'd be a great place to start this discussion. In that report, you began by saying it's clear that 2025 is the year of stablecoins. So what I thought we could do is just understand why you think that is and also why they matter for cross-border payments.
Sure. So within the cross-border payment space, the amount of discussion about stablecoins has absolutely shot up over the last few months, as anyone working in the field will be able to echo. We've seen an enormous increase in a number of mentions in press releases in companies in the payment space. We've also seen an enormous jump in the number of mentions in earnings calls. So this most recent round of earnings calls, almost every company in the space mentioned stablecoins at least once, whereas only one or two mentioned in the previous few. So that's been a really interesting change. I think one of the biggest reasons that they matter for cross-border payments is that they represent an unlocking of an opportunity across a number of different areas. Stablecoins don't necessarily provide a kind of unilateral step change for the industry. It's not a complete replacement for everything, but it does provide opportunities for significant revenue improvements and new market opportunities across several different applications. And so people are getting quite excited about it from that point of view.
Okay. Any other sort of like highlights from that report that you can give us the top line?
I think really, as the report goes,
I know there was a lot of pages there.
Yeah. The report was really designed as a primer for people in the industry, because I think one of the things we were finding is people were excited about the idea, but they weren't really understanding the technology in depth or really seeing, where the big applications are. I think the biggest thing to understand is it's an emerging market opportunity, and we saw that overwhelmingly. And the opportunity that we estimated was in the trillions for that. It's I think about $16 trillion as the baseline opportunity, and that really is quite significant and sort of growing. But also it's important to recognise where it's worth focusing the attention, where it's probably not going to disrupt the space as much.
Sure. Kristaps, from a merchant's perspective, how much of an appetite is there for using stablecoins in cross-border payments? Thinking in terms of like the businesses that you work with, are you seeing demand from those companies?
Yes, we do. And I think the more global the business is, the more interesting they are in the stablecoins. There are markets that are more easy accessible with the standard or classicals, the fiat rails. And there are markets that are not so easy accessible. Specifically, let's say we can talk about Latin America, we can talk about Africa's different regions. And if our merchants are more global and providing services to these regions, then that's become more interesting. Obviously, there is a lot of also benefits to it, right? So the speed I think is the the one that I would highlight the most. There are maybe a bit less in terms of the pricing, because some of the cases, depending on accessibility, it can become more expensive as well. However, I think overall there is a big potential for that. For our side, as a Payabl side, based on the merchant demand, we did also introduce option to accept and pay out stable coins for our merchants. So this is part of our Payabl One platform offering. So our merchants don't need to touch the volatile asset. We will do all the steps for them. So we'll capture the transaction, we will exchange it, and actually release them in fiat. So I think they can benefit for both of the worlds. I think I also did my bit of the research as well, and I was very interested to see which are the big platforms that are using stablecoins. And for example, Shopify actually accepts stablecoins as a payment method through different PSPs. Twitch, which is one of the big streaming platforms, are accepting stablecoins. As a lot of travel and hospitality online web page accepts stablecoins as a payment. It means that this is a real life case where they are usable.
Okay, Aleksandr, you're kind of nodding along to some of that that Kristaps was saying. It's a good opportunity to bring you in at this point. Obviously, you've just recently finished your stint at Wolt. I thought it would be good to kind of just get an overview of that business and what you were doing there, but also understanding their payment landscape and how you were managing the cross-border payments there.
Thanks. Sure, Russ. Yeah, I was noting because I think I agree with both Lucy and Kristaps' observations on stablecoins. But indeed, past few years I've been leading payments in Wolt, the kind of marketplace that provides more traditional things like food or whatever else you could offer, right? And in our case, although we did a lot cross-border, right, as we presented 30 plus markets, and we also deal with accepting payments as well as paying out to couriers, restaurants, and so on, right? So we move money a lot. However, due to the industry, right, and due to our, say, mentality model, usually people do not pay with stablecoins for burgers. That's why, honestly, in our industry, in marketplaces who deliver stuff, it's not that kind of emerging trend at the moment. However, I've just recently returned from Monaco, and there you can buy actually a burger on the street using the stablecoin. It's quite popular there. So I think it all depends on mentality on special markets, as well as the industry as well.
Okay. Lucy, you were smiling at that. Have you kind of experienced that yourself?
I mean, not so much where I'm in London, but certainly I think it really reflects that it's such a market-specific phenomenon. There are some markets where it's something that people are sort of using and owning and being sort of very conscious about. In other markets, it's much less sort of direct, or if people are using them, they may not think of them in those terms, or they're using them as part of products and it isn't necessarily consumer facing. So there's definitely some interesting phenomena there.
Yeah. Well, sticking with you, and one of the things we're keen to look at is the challenges that still need to be solved to enable more widespread use of stablecoins. Can you kind of talk us through that?
Yeah, so I mean, there's lots of different elements in terms of infrastructure, enablement, that kind of thing, the usual pain points that the industry faces. But one of the biggest areas is actually to do with liquidity of stablecoins. So in money movement in particular, one of the most common ways to use stablecoins is in what's termed the stablecoin sandwich, where you're paying in fiat, it gets converted into stablecoins to sort of move across blockchains as the kind of rails. And then on the other side, it then needs to get off-ramped into fiat again. And with that, you need to actually have demand for that stablecoin in the local currency you're off-ramping for that to actually work. And if you haven't got that, that's going to create challenges. And similarly, you need to have sort of sufficient stablecoin liquidity to balance the amount of money you're trying to move, which simply put means that it's sort of easier to move smaller amounts in these spaces, and also markets where lots of people are already using stablecoins, it's easier to pay out to. And what we've generally seen is that the sort of lower end of the market has started the trend in some spaces, particularly areas where maybe the local currency is very volatile, so there's been demands to hold a sort of dollar proxy. That's created kind of an increase of demand to use them at a consumer level, which has then moved to a business level and then gone up from there. So essentially, the market needs to grow in different places, and particularly areas where there is some fledgling potential, but it's not there yet, it needs to grow a lot more, whereas in some markets, it's already relatively well developed.
Aleksandr, any thoughts on that?
Actually, I thought about something that I forgot to mention before, right? Although I said that we do not pay with stablecoins for burgers, still we do have reach outs from customer, indeed, from some markets. And I think Lucy mentioned markets where the local currency is volatile, right? They prefer to use, and they would probably like to use stablecoins at some point. So I don't think that it's kind of long away from us in the future, also to be able to pay for delivery of the food with stablecoins in certain markets. Not talking about the Wise, where I have previous experience, right? So Wise is a platform of cross-border transferring money, right? And there, of course, we had a lot of reach outs and ask from customers basically to use one another way of cryptocurrencies. Although as Wise is a fintech company, I think we're going to touch it maybe a bit later, it's very tied into the compliance and regulations, right? And this is a bit different area where stablecoins also have maybe some context of risks.
Okay, Kristaps, beyond stablecoins, what's changing most quickly in the cross-border space?
I think I have said it in one of the interviews that we had, that I think future is instant, and I think this is the what I'm sticking with as well, and this is what's happening all over the, let's say, world in the main market. So if we look at our in UK, right, faster payments is one of the longest standing instant scheme, or one of the longest standing instant schemes, and it will be very successful. Same as European Union SEPA, right? So instant payments are now obligatory from this year to all banks to support it. This also means that target instant payments, which is a cross-border scheme, actually can become an instant. United States Fed now. So I think instant is the future. I think the stablecoins will contribute to that. I totally agree on the most volatile markets where the currency is more volatile. It's the first use case where we're seeing even people are transferring their salary, I mean, the same day to the stablecoin, just to not to lose the value overnight, right? And also I would say that this will continue to grow, and then we just become more mainstream towards day-to-day use, right? The same goes with the APAC region, right? So UPI is very popular and very successful in the region, which is also an instant scheme. So I think that's, in one world, would be just an instant settlements, and that will just expand. Lucy's report highlighted also G20 roadmap, which says that the cross-border payment should be less than an hour by 2027, which would be very interesting to see, coming from really 5 to plus days cross-border payments reaching beneficiaries, even to the big markets like United States.
Lucy, any thoughts?
Yeah, I mean, there is definitely potential for improving speeds. There obviously are plenty of markets where the speeds are very good, particularly for, consumer money transfers and that kind of thing. But yeah, there are definitely spaces where there's still a lot of need for that to speed up. I will say, I think sometimes there are types of payments where instant settlement isn't necessarily desirable, particularly from a risk perspective. There are business type payments where sometimes it's helpful to have a little bit of a window where you can roll it back if there's a problem. So then we may ultimately see some solutions built in that can kind of solve that if it does become part of that process. But there's definitely some kind of interesting room for development there. And I think looking more kind of broadly at the space, it's important that I don't think this is going to be something that takes over everything. And it also isn't necessarily the kind of stablecoin providers versus the rest of the industry. There's a huge amount of collaboration going on here in the space. And so it's really a lot of people kind of working together on this, and people sort of integrating each other's solutions into a sort of hybrid network solution in a lot of cases, rather than it being the kind of traditional players versus the new stablecoin disruptors.
Aleksandr, what changes do you see coming in cross-border payments?
That's a good question. So first of all, maybe of what Lucy just mentioned, that there are some collaboration and actually intersection on different products, including different payment schemes, right? I think one thing we actually cannot deny is that there are already banking cards attached to the wallets, right? So those, even in the Wolt traffic, where accept consumer payments and payments with cards, we don't actually know how many of them are funded with the cryptocurrency, right? There might be some suggestions, but actually the border is not that tight there, right? So saying that Wolt do not accept cryptocurrency wouldn't that fair in that sense. Overall, in cross-border payments, what changes do I see? I think till now we've been very positive on the trends, instant and so on. But one thing I actually seen through past years, throughout my career as well, I would like to have maybe everything centralized. As I've been a product team, right, and been delivering product for many markets, of course, I would like to centralize everything. And then cross-border is a solution for me to open new markets immediately, right, and transfer money from one part of the world to another according to the company needs. The problem, though, is that overall tendency in the world comes to an kind of isolation, right, and more stricter local regulation. And those, even in some areas, even in European Union, right, we have to implement the local payment methods due to the compliance requirements instead of using cross-border setup for anything. So I think we cannot really deny, and this factor also will play a significant role in the coming years.
Yeah, it's interesting. I want to add just maybe a small thing that we see from our merchants as well, that the platforms that are selling gift cards are very popular. And these gift cards can be bought whether with the fiat or with the cryptocurrency. That also supports your point that yes, maybe you're not directly accepting the cryptocurrency, but you can buy with the cryptocurrency Starbucks gift card or Wolt gift card, which then potentially can be used to redeem and change the value, right? And same for the fraud, which I will support Lucy's point, is that I think there will be a lot of tools that will need to be enhanced actually to fight this in future for the instant cryptocurrency and payments. And I think this is maybe one of the good and the bad thing in the same place. When the cryptocurrency is instant, there is no rolling back, right? That's it.
Lucy, just out of interest then, how much of a challenge and threat do stablecoins pose to the existing monetary system, and who could be the winners and losers if they become more mainstream?
Yeah, I mean, that's the big question. And I think everyone in your house will have slightly different opinions on this, but I think it's not necessarily that the losers of the traditional system, the winners are the new guys, right? There's a lot of opportunities for traditional players to make use of their on-ramp and off-ramp capabilities. They often have really good local integrations with markets that can play in and build connections that the infrastructure player doesn't have if they're just a stablecoin player. But I think there are also kind of those around maybe in the card space who have some interesting, slightly more existential challenges with stablecoins, because they potentially undercut things like interchange fees in ways that could create different things. And I think those players know that, and you're seeing that reflected in how they're moving in the space quite a lot of the time as well. Beyond that, the other really interesting thing here is that stablecoins are inherently very dominated by the US dollar. They are, well over 80, probably more than 90% of the market is US dollar denominated stablecoins, which means if you're using stablecoins, you're using the US dollar. And it's very clear that, say, in Europe in particular, there are real concerns about this and around what that means for kind of monetary sovereignty. How that's resolved is really, something we'll see. I mean, there are efforts to kind of develop euro-denominated stablecoins, but unless those get a certain level of scale, their utility is going to be limited. So it's very interesting to see how that side of things goes, and that really ties into some of the points that Aleksandr was making around kind of the regulatory issues as well. That's a whole other side. So I think it's almost going to be a question of areas around that rather than the individual players, because so many of the players are sort of working across this in so many different ways.
Aleksandr, do you want to come back on that?
Thinking about the future, right? The trends. I think that I agree with what was said, Lucy, and what Kristaps also mentioned about the future and how it's gonna come. But I also agree that traditional schemes, traditional payment methods, not gonna disappear, right? It will be maybe just a bit of a different balance in a few years from now. And I hope that indeed, say, slower, less convenient, more expensive payment methods will kind of go to the, to they're gonna decrease in popularity, right? Though those who were fast, who are convenient for consumers, who are preferred by merchant and consumers, will grow in their share in the market. So I think this is what I'd expect. So I wouldn't think that it's a revolutionary change, but rather an evolution from the current stage to something a bit better for all the players in the world.
And I would agree as well, because there is, for us, what we're seeing is that the pricing generally goes down to get on and off ramp, which is, I think, for me, the biggest downside at this moment, because you need to pay fees to get your fiat into the stablecoin and back, which Lucy mentioned as well. And I think if those prices go down, that will be evolution, as Alex said, and I agree with that, because if that becomes widely available and it's cheap, then that maybe is the future.
If your business relies on e-commerce, there's one part of your site that can make or break a sale, the checkout. And it turns out what consumers want at checkout might surprise you. We're talking frictionless flows, localized payment preferences, and even a surprising number of shoppers choosing security over speed. Payabl has just released its European checkouts report, a deep dive into what shoppers across Europe really expect from their payment experience, both online and in store. Whether you're battling cart abandonment or exploring new payment methods, this report is your ultimate guide to optimizing conversions in 2025. Download it now at payabl.com/state-European-checkouts and get the insights you need to turn browsers into buyers.
Kristaps, let's come to you then. Crypto adoption among merchants is still relatively niche. How might this change, and what would need to happen to ensure broader uptake?
Although I agree that it's relatively niche, and it depends from industry to industry. Some of the industries are actually quite prone, and we are seeing that some of the merchants are up to 15 to 20% actually accepting crypto or stable coins as a payment method. Some of them are almost non-existent, Aleksandr mentioned, so day-to-day life maybe is not there. However, I think the trust is the key, right? If overall crypto industry will evolve under a better regulation, this will benefit adoption of all the cryptocurrencies and the stable coins themselves, either it's trading or it's a payment as a payment method, right? So all the larger players have already rolled out a significant portion of regulation in US, UK, and the United Kingdom. So I think that's the very good step forward. And I think that's also our outlook for a couple of years, depending how the central banks will do. Let's put it this way: with the central bank digital currencies, it also will benefit hopefully us as consumers.
Great. Lucy, any thoughts on that?
It's definitely going to be driven by consumer demand to some extent. I think there's also the question of how much it's going to be something that's on the kind of end point versus how much is under the hood. So you might see stuff where it's actually forming part of the process in the payment, but not actually fiat still being the end point of the whole process. But I think where it will also drive is essentially is that kind of flywheel effect of demand growth, right? You have more in the system and more opportunities to lend will encourage more people to want to hold stable coins and other cryptocurrencies and spend them in that form. So I think it's as much the kind of broader market as it comes up together rather than any one thing kind of pulling it up.
Great. Aleksandr, where does crypto adoption sit on the priority list for merchants, and will that change over time?
I see it will be changing, right? For us as a product people, we follow the consumer demand. And as Lucy mentioned, and Chris also said, if customers will start asking for us to accept crypto payments, we definitely will implement. And I think it evaluates from market to market and depends on how customers trust to the currency, right? Crypto versus fiat. And if as it's changing in the world, and it's changing in the coming couple of years with regulation as well, it probably will become on our plate as well, and we're gonna then implement it as an alternative payment method. I think it's relevant for any marketplace, right, who provides services to customers, not only to my experience of product.
Okay, we're coming towards the end of the podcast. Lucy, I just wanted to come back to your reports and just pick up on some of the things that were discussed in there, particularly around regulatory changes. Is there anything that you can kind of highlight, there at all?
Sure. There have been efforts in many parts of the world to kind of improve regulatory frameworks for stablecoins, but I think by far the biggest change has been the passing of the Genius Act in the US, which has happened only in the last month or so. With that has created a kind of regulatory framework for operating stablecoins and using them within mainstream financial systems in the US that just didn't really exist before. And as a result, it's given confidence for really traditional banks, people like the Bank of America, to step in and actually start formulating proper strategies for this and start to look at whether they want to launch their own stablecoin. And that's such a radical change from where we were even 6 months ago in terms of who was willing to touch the space. And I think that in many ways has given the vote of confidence for really traditional parts of the industry to really start thinking about stablecoins in a way that they hadn't before.
Great. I guess we should let listeners and viewers of the podcast know where they can get a copy of that report. Where do they need to go for that?
So that's fxeintel.com.
Perfect. All right. Nice opportunity for you to get a little plug in there.
Sure.
Listen, we are definitely down to the final question now. We have kind of touched a little bit on the future, but Aleksandr, I'll come to you first on this one. If we were to have this same conversation 2 years from now, what do you think will be different in the world of stablecoins and cross-border payments?
Well, I think any marketplace already by that time will have it one another way. So I think it would be not something that is coming, but already has happened. I think it's the main thing that will change from my perspective.
Okay. Kristaps, let's come to you.
I would agree. I think this will be becoming more mainstream. First of all, I think the crypto industry is just being more popular and more involved. So it means that more money will move into it. If more money will move into it, there will be more room for stable coins to grow. Maybe there will be a new application that will allow it to store them easily. Maybe it will come peer-to-peer payment method which will be favored by a lot of people. So I think there is a lot of room for speculation where we can go with that. But I agree with Alex saying that this will be a mainstream thing. And I also think that we as a payment service provider will need to be in front of those changes. So we need to be very careful what we choose and how we progress and not miss out of this change that will happen most likely in the next couple of years.
Lucy, we gave you the first word on the podcast, so I'll let you have the last one. What's your thoughts on that?
I appreciate that. Well, right now, less than 1% of the world's money movement is using stablecoins. That's very likely to increase quite significantly over the next few years. When it's unlikely to be everything, it's unlikely to be even half, but it's going to have grown significantly in that time. However, I don't know that all of those payments are going to obviously be with stablecoins. There's going to be lots of situations where your money is moved and you won't know what infrastructure is being used, and it probably will be stablecoin under the hood, and that's going to be a really interesting change for the industry, but possibly less exciting for the end user.
Excellent. Well, listen, thank you once again, Lucy, Kristaps and Aleksandr. Thanks all for your insights today. Please do follow this Pay It Forward series wherever you get your podcast. You can catch up with all the previous episodes at payabl.com/podcasts and also on our C-Suite podcast website, of course. If you want to contribute to the discussion, you can find the C-Suite podcast on LinkedIn and all the usual channels. Finally, if you'd like to get in touch with the show, you can do that via the contact form at csuitepodcast.com. But for now, from me, Russell Goldsmith, thank you for listening and goodbye.